Welcome to it. Time to have a look at what's happening on the market side. But before we get to that, we're going to be talking about Cashbuild. They published their financial numbers. And to get into the actual specifics of what happened, they did mention in their 6 weeks to end June that they were impacted by the looting that happened about a month or so ago. But to get into the actual specifics in terms of what they're seeing from a consumer perspective, especially from a store growth perspective, we are joined by Werner de Jager, who is the CEO of Cashbuild. Werner, thank you so much for your time. Let's go through the highlights of the period that was for Cashbuild.
Well, thank you. Yeah, it was a specifically pleasing year for us, exceptional results. We saw revenues grow by 25%, and our operating profit reaching $1 billion for the first time, up 100%. All in all, very, very happy. We also managed to increase our final dividend and pay out the year's earnings to shareholders.
Right, listening to your results presentation earlier on, your financial director mentioning operating profit growing by 8.6%, but he mentioned that that is not a sustainable number, but you guys are making the best of the unusual times that you find yourselves in. I'm curious to know, what sort of pressures are you experiencing from a Cashbuild perspective that would give you that indication that this number is not sustainable?
So our model is very much focused on the top line, and when you see the top line growing this much, able to control costs at lower than your top line growth, we can see that operating profit percentage of 8.6 happening. But going forward, you've mentioned in the intro that we've already seen a bit of slowdown in the first 6 weeks, and we know that our costs will grow again this year. So there will definitely be a pressure on that number. Historically, it's been much lower, so we believe that is a number of between the 5.5% and 6% has been the number that we've been aiming for as a sustainable longer-term number.
When it comes to the looting that affected not just Cashbuild, but many of the other retailers, what was the impact from your perspective on Cashbuild, and when do you see some of the stores coming back online going forward?
No, we lost 36 stores in the looting, and when I say lost, completely emptied and destroyed. And so in terms of that, it's about 12% of our store base. Luckily, we are insured for the asset loss as well as the loss of income, but the rebuilding of it is going to take us some time. We've managed to do one so far. Quite a few are in progress at the moment, and if all goes well, we'll have about 20 of them back up and running by the end of this calendar year.
When it comes to the demand for the products that you do sell, whether we're talking, in the rural areas, township, metro, etc., what kind of demand are you seeing from your customers, and in which areas?
So we've seen fairly even spread growth in all the areas that we trade. The one that was slightly lagging was in the rural areas, but that is explained in the first half by a lot of issues getting the products into those stores. And now for the second half and the full year, most of the P&L stores are in those rural markets, and they haven't performed as well as the Cashbuild stores.
Right. In terms of, outlook and growth opportunities for you and the team, what will you be looking out for that will tick off the box for you from an acquisition perspective as well?
We at this stage not pursuing any new acquisitions following the termination of our proposed acquisition of the building company. But we are focusing heavily this next 6 months on making sure that we reopen those stores that we spoke about earlier, but also to able to grow it, the footprint as well, by planning to do another 10 new stores for this financial year coming.
And in what areas will those 10 new stores be in, before I let you go?
It's fairly widespread through the country, so it's not focused in one specific area.
All right, Werner, thank you so much for your time. That is Werner de Jager, who is the CEO of Cashbuild. And just like Cashbuild, we had the likes of Italtal also talking about the fact that they are seeing robust demand, especially when it comes to home improvement during COVID-19 pandemic. And this is again as consumers are forced to spend time at home. So we are starting to see renovations pop up here and there, especially even in this low interest rate environment. Cashbuild, they announcing that they've declared a 22 Rand 11 cents final dividend, which is more than an eightfold increase from what we've seen in the previous year. And as a result of all of that, bringing that total dividend to about 29.35. That's 29 Rand 35. However, we're going to get to the market side of things. And what we saw is that the Asian markets were mixed at this particular point. And this is as a result of the private survey, which showed that Chinese factory activity in August seems to have slowed down. The Hang Seng Index, however, was 0.4% in positive territory in its final hour of trade. But just get into that PMI figure. It came in at 49.2, which is below the 50 mark that separates expansion and contraction. And elsewhere in Japan, we saw those markets up 1.2%. As we analyze markets in Europe, of course, in that particular side, they did advance, and even though this was on the back of Eurozone inflation, some of the analysts saying that that inflation number that came in at 3% was a little bit higher than the ECB's view that it should be at around 2%, and that might add pressure going into next week, where the ECB would have to address the inflation concerns that come to on that particular front. When we look at US stock futures at this particular point, are holding a little bit higher, and again, it's still that conversation around inflation. Everybody's going to be looking at the jobs reports that we are expecting later on this week. To talk to us about some of the themes that are playing out right now, we are joined by Chantal Marx, who's from FNB Wealth and Securities. Chantal, thank you so much for your time. Let's touch in on the JSE. Opened a little bit weaker this morning. How are we faring now?
Yes, I mean, the overall sentiment on the JSE remains quite muted. We actually had a very strong start for about 15 minutes, probably even less, let's say the first 10 minutes of the market, and we just kind of ran out of steam after that. Really, the pressure coming from two areas. The first area being BHP, a big stock on the JSE, coming under pressure today, but that is because it's trading ex-dividend. There doesn't seem to be any other reason behind that specific move. Of course, miners performed very well over the last year, so the dividends that they've declared have been quite chunky relative to their share prices, and that's why we've seen the share come under pressure. Then we've also seen the so-called SA Inc. stocks under a little bit of pressure today. Just the retailers and the banks taking a little bit of strain. I think this comes after several months of them doing exceptionally well.
So depending on what you read, some analysts might characterize the month of August as quite turbulent. When you look back, it's the 1st of September. How would you characterize the month that was from a global or local markets point of view?
Well, exactly that. I would characterize it as quite turbulent. I mean, we actually saw a massive sell-off in global equity markets into the middle of the month, and then a steady recovery after some dovish comments from the Fed, and also just kind of the ship steadying somewhat after the comments by Fed President Jerome Powell at Jackson Hole. But we had a lot to contend with in August. I mean, you had the Delta variant that continued spreading, vaccine rollout gaining traction, but still a lot of vaccine hesitancy out there. You also had the Jackson Hole conference, you had fears around tapering, and then, of course, you had the Chinese regulatory swoop that took the market by surprise. It probably started a little bit earlier than August, but it really intensified through August after that education sector, that private education sector, online specifically, was all but wiped out by the government in China. So a lot to contend with. Thankfully, we ended up for the month ever so slightly, and here's to hoping for a less volatile September.
While we, think of a turbulent August, immediately what comes to mind is oil prices. I mean, when you look at what is happening, like what are some of the, themes that are sort of stacked against oil prices right now, and how important is today's OPEC Plus meeting?
Yeah, so oil's quite complicated. Fossil fuels generally is quite complicated because what you have on the one side is a requirement for the world to become cleaner in the way that it generates energy and electricity and it powers its cars. Longer term, certainly that is a massive theme. But shorter term, something has to plug that energy deficit that we still have from a renewable energy perspective. So fossil fuels still have an important part to play. But what you have is a lack of investment in those industries because they're not viewed as long-term thematics, and you end up having a bit of a shortfall or a supply constraint. Now, in oil, the situation is no different. It just is a lot more susceptible to short-term economic fundamentals or changes in the economic outlook. And what we have at the moment is that OPEC is going to sit around a table and they're going to decide what they're going to do with regards to production, because they still can ramp up production near term. If they decide to ramp up production, you could expect the oil price to come down a little bit because there will be more supply in the market. If they decide to keep production steady, I think we're going to have higher oil prices for longer, and it could push even higher from these levels. The rumors have it that they're looking to keep it steady. So as South Africans who import oil, we probably need to hold on to our hats.
Right. When it comes to the Fed's pressure to tighten, do you think it'll come from an inflation side or jobs report?
Oh goodness, it's definitely going to come from the inflation side. So the job story is more of an indicator that they look at in order to see what the health of the economy looks like before they decide to hike rates. Because you don't want a situation where inflation is increasing and you are hiking rates to counter that or tapering to counter that, but the economy is still under pressure and consumers are still under pressure. Because when debt payments increase, it's going to become even worse for them. So ideally, they would want to raise rates when employment is very strong and the economy is very strong and can withstand an increase in interest rates or tapering for that matter. So I think the push for the Fed will definitely be inflation, but the caveat will be whether or not there's full employment in the US.
Chantal, thank you so much for your time. That is Chantal Marx from F&B Wealth and Investment, talking to us about what is happening in the markets right now. And she did mention that we've got, of course, the OPEC Plus decision on production. Then, of course, we're going to be looking at the analysis from that side of things and of the U.S. jobs numbers that investors will be paying close attention